Yeah, g'day. Today we're going to talk about bonds and Bitcoin. Now, you might not think there's much relation there, but Bitcoin has been touted as the inflation hedge, and bonds or the yield on the bonds is usually a good insight, especially the 10-year treasury is a good insight to where we are going forward in terms of inflation expectation. I'm going to have a little look at that. But first of all, I just want to be clear that I am no bond expert and I am still learning a crap ton about bonds, treasuries, and those debt instruments. They seem really boring, but I think they play a significant part in assets, especially the crypto assets, and people are not really taking that, I think, as seriously as they probably should. So I'm going to just have a quick dive and compare the 10-year treasury bond to Bitcoin and see if we see any correlation. Right, here is just a 1 year out of what we've experienced with the 10-year US Treasury, and as you can see, it sort of peaked at about 174, 1.74% at about 21st of April there, and it almost took back that at 1.7 on the 12th of May, and let's have a look at Bitcoin now. Now, that chart looks, just flick between the two. You look at that, yeah, I probably should show it on log, but that is a uncanny resemblance, and peaking, the bond market almost peaking around the same time, which I find quite interesting. And what makes me quite interested in that is if you think about what bonds are representing. They're representing the risk of future inflation, or basically the chances of exponential sort of growth in the future. If yields start to rise, that chance increases. If we go and look now at the 10-year bond, it's starting to roll off, but it may have put in a little temporary bottom, and we could see the continued trend on that 10-year rise up, and that's something I think we need to pay pretty close attention to. If we get back up to 1.5 or around there, I think we have a very high probability that we see Bitcoin and the rest of the crypto market have a nice run again. And the reason for that is the likelihood of, or the perception of inflation might have increased, and some of the transient nature that the central banks are relaying might be all crap. So there is a chance that they are also right and it is transient, and we see it start to roll off at the end of this year, which I don't think would be good for crypto. I'm not going to gloss that up at all. I think we would see substantial more down pressure, and that could push us down potentially to 25, 20k on a Bitcoin price. I'm not 100% either way. I think long term it is transient inflation. Yes, you're going to have this overall inflation that is underneath everything, raising it up. But if we're not going to see hyperinflation, we're not going to see hyperinflation in the West. We're not going to see it. Well, you're going to see it maybe in developing countries and countries that have more issues with their monetary policy. But I don't think we're going to see long-term inflation. And the my realization of that is the whole deflation narrative, where technology is inherently deflationary. In every aspect of our life, we're trying to reduce the cost of things, which is deflationary. And you can see that now. Right now, if we start to see wage inflation, what are they going to do? They're going to try and innovate. Businesses that can do and won't close down are going to try and find ways to reduce that expense of wages. If they have to pay 20% more, that's suddenly a 20% extra incentive to try and find a cheaper way of doing that, whether that's to offshore the work. But if it's something service-based that requires a in-person service, you might see more readily use of technology to make that cheaper and speed that up. And that could be things ranging from like admin and jobs that are required but are reasonably easy to build a platform or some form of technology to replace it. But it's just not worthwhile at the moment. But give some price incentive, anything is really possible. Now, going back to the bonds, let's have a look at the yield curve. Here is a little graph showing all across the whole yield curve. Now, as you can see, like the 30-year is yielding 2%, and you might think, well, that's pretty crap yield for 30 years, considering if you consider real rates of return and discount the current CPI figures off that, you're barely getting 0%. Like on the 10-year, you're probably negative percentage. So it's kind of a bit of context there, is that we actually have negative rates. Do I think we're going to go negative in the future? Well, I think if there's a catalyst, we could definitely see negative rates occur. And while they might be negative in the short term, they might be negative down to the month or year or the current floating rate, the repo rate. You might actually see the long end of the curve push up because of that, because the long end is always trying to seek out if there's going to be inflation in the future. And if you bring forward a lot of that demand, there's the potential that there's a lot of consumption, and that causes exponential growth early on, and you might see the long end of the curve start to ramp up, which would be good for Bitcoin, I would say, because Bitcoin's also trying to sniff out that future deflation. And I don't think it's completely found its niche at the moment. I would say Bitcoin is still sort of floating around between being a reserve asset, inflation hedge, and still the talks of using it as a currency, obviously on a layer 2 sort of system. So I don't know, where do I think things are going for the rest of the year? My quick sort of overview, I think if we start getting inflation figures that are not transient, and we continue to see high inflation prints, and I think that will be probably enough to convince the bond market to start turning upwards, and we may see, and in that same sort of stroke, that probably will drive the crypto market, especially Bitcoin, to start to get some more traction in terms of price. But if it comes in and we get a really low print, what else can they do? More QE? Go negative rates? I think the negative rates is off the table until we have something else that really causes it as a catalyst. You need an event to initiate it. And I don't think just because we're not seeing the growth we want is going to be enough of an excuse, especially in the US where you're trying to attract capital to, and people don't want to invest in a dollar that is giving negative returns. Now, if that's not going to be a good scenario. No, I think we would see $20,000 Bitcoin in the next 3 to 6 months if we get lower prints of CPI. If the CPI prints are as high, or at least not a big dip off, I think we're going to get some pretty high prints. And if we do get those high prints, I think we'll see substantially higher Bitcoin price. I can't see inflation rolling off quite yet. I do think it's transitory long term, but I can't see it rolling off any earlier. But I'm no bond expert, and it's really like throwing a dart into the future to see where these things are going. It's always looking forward to see what's going to happen. We can just follow it, maybe keep a close eye on the 10-year to get an idea of where things may be trending. But I have a feeling that the 10-year is going to move at same sort of movements as BTC. But if we start to see a trend up in the 10-year, then I think we are ready for the last stage of this bull market in crypto, and we'll get a nice little pump maybe into the new year. Let's see how we go, and I'll probably keep on doing, as I learn more, I'll keep on doing these little bond versus crypto videos, and I hope you all have a fantastic day. Catch ya later.